RMB Private Bank is a division of FirstRand and scooped 6 2012 Euro Money Awards for private banking services in February this year. RMB Private Bank's segregated balanced portfolio invests in local equities, listed property, bonds, cash, as well as offshore assets over the medium to long term with a moderate level of risk. Joining us in studio to share their investment strategy, portfolio manager Suraj Sookdhew. Thanks very much for your time.
Pleasure.
Now let's start with your asset allocation in this segregated balanced portfolio. I see that you have got a relatively high equity exposure. Perhaps start there.
Yeah. So, well, as you rightly pointed out, it's investments across the different asset classes: equities, bonds, cash, offshore. It's invested in terms of prudential investment guidelines. So your typical pension funds would invest in something like this: not more than 75% in equities, so a cap of 75%. And not more than 25% offshore. Now, on the equity line, like you point out, we are reasonably overweight relative to our peers. I think we're cautiously optimistic. We have been underweight the resource sector, have benefited from that over the last year. Overweight the industrials, outweight maybe the financials. The house is still fairly defensive, so we liked the defensive industrial counters, the likes of British American Tobacco, SA Breweries, Life Healthcare, Vodacom. So that's worked for us over the last year.
You've got a lot in your own company.
Yes.
I mean, if we look through it, you've got
yes.
7.5% I think in RMB, yes. And then if you go into RemGrow, if you go dig down,
absolutely.
So you've got about 10% in your.
Yeah.
Do you have inside information?
No, look, I don't think
so. I also looked at that and thought, RMB Holdings, like, do you know something we don't know?
I think so, Bron.
Look, and that's worked for us as well. I mean, the share price, I think, reaching new highs today. Look, I think it's one that we've liked for a long time, but having said that, we also like Standard Bank. So our preferred banking counter right now would be Standard Bank, a restructure, still a strong brand, still good exposure to the African market. From that perspective,
have they restructured enough?
Look, well, there's always market talk that there's going to be further restructuring, but we'd like to believe that a lot of the restructuring has taken place, and going forward, I think it's well positioned to benefit from that restructuring that has already taken place. And Standard Bank has a very strong brand, the African exposure.
They're looking a bit rich though. I mean,
well, compared to all the other banks.
Not the banks, I think the whole sector
yes, no, you're
is
absolutely
looking
right.
very, very rich at the moment. And in fact, the whole JSE is looking pretty rich, but I mean, banks are looking particularly rich.
But if you have to compare to where the opportunities are in the resource sector, I think it's more like a timing issue as to when do you switch out of the financials and industrials into the resource counters. I think investors
do you make those decisions yourself?
Well, we have a team. It's a team approach. So you have an asset allocation team and then a sector allocation and stock selection. So it's basically a team approach that we adopt at RMB Private Bank.
You've got high financial exposure. Sorry, David. Just looking at RemGrow, I mean, they have got that's pretty much FirstRand.
That's what I'm saying. So if you take RMBH plus RemGrow,
have you already asked that?
I'll look through that.
Sorry, I thought you were only focusing on the RMB holdings.
No, but that's what I say. If you look at RemGrow as well, we're going into heavily.
So I
into
wasn't
that
listening to you.
That's what I'm saying. They know something we don't.
Absolutely.
Look, RemGrow's also got some industrial assets in there that we like.
Some small amount of industrial assets.
And they've just got a big chunk of Impala as well.
That's right. But if you look at the balance sheet of RemGrow and the cash that sits on there, it's very attractive from that perspective as well. You can perhaps expect a decent dividend coming out of the company should they not find other acquisitions. So on that basis, we still like RemGrow.
Are you accumulating more Anglo-American today?
Well, like I say, it's almost a timing issue. So at some point, we're not comfortable as yet to switch out of those industrials and financials into the resource counters. We still don't have that sense of comfort, but at some point, investors will
your exposure offshore?
Look, we've got 18% offshore exposure, roughly, and it's more of a diversification strategy for this fund. So you want some offshore assets. Also invested in terms of prudential investment guidelines. So we've got about 48% in equities, 38% in bonds, a little bit of hedge funds in there, and some cash.
Is that all you're allowed? Is that?
In terms of the fund, we wouldn't go over 25%, so we can go further. But I think at this point in time, we're comfortable with the weighting at around 18%.
I say that because I just heard an interview with Pitt Viljoen, an old Pitt who was, he's celebrating his 10th anniversary, and he said that, you know, the South African market is looking very, very expensive now, and of course all his money is offshore. So, you know, it's a difficult decision.
Absolutely. I think you can find pockets of opportunity if you look at multinationals based in developed markets that trade globally, like a Nestle, for example,
and then have big exposure to emerging markets.
Can have
Nestle has 40% exposure to emerging markets.
Yeah, look, and we still think, you know, South Africa has some value. If you look at global or developed market interest rates staying close to zero, you know, as soon as there's a risk on trade again, you know, our market can get taken higher on the back of that as funds flow to emerging markets.
Where are you finding value at the moment, though? I mean,
within our market? Look, the value is to be had in the resource sector, but I think it's a timing issue. We're still comfortable to stay defensive industrials.
Because Bronwyn's buying platinum, so have you sold the platinums that you got from Remgro, or are you going to keep them?
I have to correct you. People are going to think I'm buying platinum.
No,
what I did say, I said if I was investing, I would it not be, I mean, yes, it would be a bit of a risky strategy, but given what's happening to the platinum price, I did put the caveat in there that when it bottoms and you see it going along the bottom of the platinum price, buy only the platinum stocks, gear up on them, sit and wait. They're going to come back.
Yeah, that's a good strategy. Look, we were invested in Impala for a while now, and that's hurt us. So the question is, do you sell now? You've had about an 8%
I didn't suggest
rally.
buy them.
No, I understand.
When you say you buy, just for people who are watching, you know, we mean theoretically. It's not, you know, you're not doing it in real thing. It's just an opinion that you hold. Yeah.
But you're right. I mean, if you believe that the platinum market can recover, vehicle sales, you know, to recover in the Japanese market, you know, the platinum stocks, if there's demand for platinum, you know, those stocks can go higher.
Well, do you believe the world is going to come to an end?
Absolutely not.
Then ultimately there will be demand for platinum again, won't
Eventually, absolutely.
I've got to ask the question about retailers as well. Have you got exposure to retailers?
Yeah, so we like Truworths on the clothing retailers. We've also had Spar. We're still very comfortable with the retailers. We think there's still demand from the offshore guys on the retailers. Lower interest rate environment, you know, we're just pushing our forecast for interest rate hikes further. There's even talks of a cut.
A possible interest rate cut. Did you see that after this recent news flow with CPI coming in at 5.7%?
So if that materializes, you know, the retailers will benefit from that. So we're comfortable with that.
That's a brave call. It is a brave call.
You know, I'm still trying to reconcile what the chat with the Tsar earlier on, you know, about where the South African economy is, the pressure that it's under, and yet we still see huge demand for retailers.
Absolutely.
It could be those foreign tourists coming in and spending a lot, but it's also very difficult to try and make up your mind as to where you position yourself in a market that has run dramatically for 2 years.
Absolutely.
Isn't that foreign money very fickle?
It is, and it can be. Whenever you have risk of trade, you can see our rand gets sold, our equities get sold back to the dollar. But I think, you know, for a much longer term, we're going to see interest rates in developed markets close to zero. I think that's a given. And as soon as foreign investors get comfortable, those funds do flow to emerging markets, of which we benefit from that. And when that happens, I think, you know, the market across the board gets taken higher.
Let's chat about Sasol. Ouch, today. Down 4.5%. And it's about 6% of your portfolio here. Let's chat about it.
Look, I think we believe that oil will stay higher for longer. I think, you know, the recent sell-off or the pullback in the oil price, we think may be short-lived. It can get weaker. But I think if you look at what OPEC has said, you know, and new finds of oil reserves, they talk about it being only valuable at $90 a barrel. You know, anything below that they, you know, don't want to produce. So we believe that oil should stay higher for longer, and it's also a rand hedge. So if the rand happens to weaken, you know, you've got that balancing act in the portfolio that you'll benefit from a weakening rand.
Sure. Well, I mean, yes, we've got it. Well, the rand at 8.34. You're lucky it didn't stay at 8.19, 8.20 today, because then it would have come down 6%.
Yeah. But as you point out, the rand is fickle as well. You know, and should you have a blowout in the rand, those are the stocks that are going to hold you in good stead.
Do you look at property at all?
Yeah. We do, so we have an exposure to both Redefine and Growth Point.
Only 6%.
I saw Redefine as one of your big holdings.
6% of your portfolio, though.
We should have been the bigger weighting in Growth Point.
Yeah.
But yeah, I think we like to play the bigger companies, the more defensive companies, and blue chip, if I can call it that. And that's why the big exposures to both of those companies.
MTN Group, another one that's out there with a lot of speculation over the stock at the moment. Do you think it's going to go the right direction?
We think eventually, but I think for the better part of this year, the negative press is going to be an overhang on the share price. I think the argument around the table is whether you cut back on Vodacom and invest in MTN, because MTN is looking very attractive at these levels. If you strip out Iran, it's still making fantastic cash flows. Dividend is very strong. So from that perspective, we like MTN, but it's just the negative press that's going to dampen the share price.
You want us to stop talking about it?
No, if you look at that chart, look at that. There's been huge foreign flows into the last few days. Big flows. And then, in fact, I haven't been able to understand the market over the last couple of days because even though there's been a futures closeout, we've had all the negative news, yet we've seen breadth across the market. Buying of everything. It hasn't been confined to some of the derivative baskets. It's been right across the board. MTN has been one of the shares in the spotlight. There's been buying of things like, I heard you just, Investec. It's been another one that's been attractive for reasons that no one can really explain. There's been a lot of flows into that. City Lodge seems to be where the money, smart money is. So individual shares attracting a lot of support.
Can you help David understand what's been happening?
Look, I think if you look at MTN, the valuation speaks for itself. Very strong cash flows, the African exposure that you get, for the company, and a fantastic dividend yield. So from a cash flow perspective and guys that are looking for the dividends to come through, MTN looks attractive. The only one concern is that you've got this litigation, you've got the negative press, and it's just not going to go away over the next 6 months. So it's going to be there for a while. It's going to keep a dampener on the share price. But at some point, someone's going to realize that there's value in that company. It's not going to go away, and they'll pile in.
We're looking for the share that's just under those top 10, that Suraj is starting to accumulate. That's going to be the winner. That's going to allow you to keep above that benchmark. Have you got anything that other people are not looking at? We've got to give trade secrets away. It's fine.
Look, I think everybody's got these stocks in their portfolios.
You're not going construction.
Look, construction, I think we are seeing the value. We're warming up to the idea of investing in construction. But I think we still struggle with where the government will have the ability to spend locally. A lot of the construction companies are looking for opportunities outside of South Africa. A lot of their revenue is coming from outside of South Africa.
When you say you're warming up, what does that mean? You're sitting and you're looking and you're evaluating and you're thinking, is the time right?
Absolutely. And I think...
What will make you buy?
We'd like to see more government, concrete evidence coming out of government that they are going to spend. You hear the talk, but we want to see something concrete. And maybe we'll be a little bit late. We don't mind that, you lose 5–10% of the upside, but we want to see something concrete before we get into the stocks. Stocks are looking very attractive on a PE basis, valuation basis.
What would your entry point be? I'm pushing you on trade secrets here.
Look, we like Wilson Bailey Holmes. We think management is fantastic, conservative balance sheet. They receive a lot of repeat business. I think the clients out there like the management style. And that's the one we like. We like Avenge for its diverse book, although they have some problematic contracts in the Australian market. But nevertheless, they have a diverse business model, which is something that we like. But should we go in, we'd probably look at a Wilson Bailey Holmes.